Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Joel Kraut. He has over 20 years experience structuring commercial real estate loans, specializing in hard to finance, especially niches and niche markets and segmented products, hotels, gas stations, car washes, oil changes, self-storage, facilities, construction loans. He is the experienced owner and a broker and a direct lender that affords him the ability to be able to bring the best structured arrangements possible to his clients. So, Joel, I am looking forward to diving into everything finance with you.
Keith, thanks for having us on. We appreciate it. And thank you for making me sound young today. Only 20 years. That's great. I had someone say 40 recently, like, whoa, don't rush it. It's right about 30, but 20 feels good right now, especially as we end the year, right? So,
that's right. Exactly. No, that's perfect. Joel, I usually like to just start really with your background. Obviously, you're in the commercial finance world right now, but, where did you grow up and what eventually led you to, find this niche in real estate?
So I grew up in New York Metro and Jamaica, Queens. I grew up very different than my own kids. So, they grew up in suburbia and I grew up kind of urban. It was a very different environment. I grew up in an apartment building. I took the subway to elementary school, so significantly different than where my kids went. And it was something that's helped me tremendously in my career. I've spent a lot of time in the finance world in a lot of inner cities and urban areas. And because I grew up that way, I look a little like a cop, so I've gotten a free pass. And two, I just felt comfortable in those environments. So it made it easy for me to work within the communities and just become part of them, for lack of a better term. I was a Wall Street trader for about 22 years, and I used to commute and I would read all these books. And in the books were these famous families. In the families' history, tradition, culture was the ownership of real estate as part of their wealth gain, right? Both short and long term. That was always part of their plan. And I figured, at some point, if you want to be like Mike, you got to do what Mike does, right? So I wasn't going to be able to be an entertainer or a professional athlete, but I could do that. And as I started to have a little bit of traction on Wall Street as a trader and made a few dollars, I started to then have the opportunity through a local realtor I met to buy my first investment property in 1996. I knew nothing. I was completely green. All I had done is read textbooks and books, actually, at that point. And she helped me put that together. And then my life and world changed dramatically. About 12 months later, a young person, a mortgage rep, came to me, residential, and she had told me she'd actually looked up my mortgage and she thought I bought it cheap. I didn't understand any of this was public record back then. So I was nervous. I was afraid. And she led me through this path where I could do a refinance, get all of my money back out against the property, still own it, still cash flow it. So nothing would change in that sense, except I would have no money in the deal. And being a Wall Street trader and thinking about arbitrage for a second, I thought, well, first, that just sounds too easy, right? That can't really be legal. That was my immediate thought, was it was actually illegal. So I called my realtor friend. I went over that with her and I said, her name is Mindy. I said, Mindy, please don't laugh. I need to ask you this question. And of course, Mindy immediately started laughing because in her world, the experienced real estate person, like, yes, of course, there are people out there doing it. I'm like, well, why wouldn't you have told me? Because this is just like, this is the greatest thing ever. So I went and did about 22 mortgages with Maria, the residential rep, over the next 2 years. And it really was the first time I'd ever done a BRRRR type of loan where I bought it, renovated a little, got it rented up to stabilize, and then refinanced and took all my money out and just kept using the same money. I mean, honestly, it was very, very simple. Back then, 1990s, people that were professional real estate investors absolutely were in the closet, and it wasn't very popular. I mean, Carlton Sheets was on TV from 1 a.m. to 4 a.m. But outside of that, it was pretty quiet out there. So, I learned sort of the hard way. I like to joke with people, you don't get this pretty without taking a few punches. And between my real estate beginnings and my Wall Street experience and understanding derivative products, being around people who had capital and wanted to put that to work to make money outside of what we were all doing, it sort of came together naturally for me. I started fixing and flipping houses. We could buy houses in, I like to call them the Tri-Cities, but Newark, New Jersey, East Orange, Irvington, which was an urban area. And I was, truthfully, one of the few people who looked like me there. And through that, you actually had the opposite happen. You became popular. People would start to come to you and ask you how you found the money, what's going on, how could you do two projects at once? We can only scrape together one. And you started talking to people and you helped them raise money for their projects and you got paid a vig for doing it. So to me, that was amazing. And it just seemed like I had the ammunition. I had the battle-tested resources from mutual friends, and we had the customer client. And we started to put together a business that way. And over the years, it's evolved tremendously. And for the first years of our private lending world career, we pretty much just lent to people we immediately knew. And then it kept growing and they would ask, a friend would come see us. So we've been very fortunate. We've been able to build a business out of that. And we barely survived the crash in 08 through 10, but we're still standing and we learned tremendously from that. And it's been an incredible ride. So to me, I'm a big believer in the real estate thing, both on the investment side as well as the lending side. And I feel like for all of us, it can build tremendous wealth without, having to graduate top of your class at Harvard or even having a college or high school education for that matter. And I've seen a number of different episodes that you've had with some people doing great things within different niches, sort of in and around the real estate space. And, they're proof positive that you can just take a core competency and build from it and create tremendous wealth and an opportunity for you, your family, your grandchildren, and friends around them. So to me, it's one of the greatest, simplest investment tools there is.
Yeah, I totally agree. And it sounds like with your first one, that seemed very eye-opening. In 1996, you buy a property. I assume this is a residential property.
Small condominium, very, very vanilla, super simple.
Mm-hmm.
I think it cost $72,000 or $74,000. It was, I know those numbers don't really exist anymore in areas you really want to live, but it was that kind of vanilla scenario.
Right. And you bought it and then to find out later that you can actually pull your money out. That's incredible.
Yeah. I thought this rep was one of the smartest reps I've ever met because instead of being focused on finding Keith and Joel and seeing if we're married and we're going to buy a house every 5 years, she actually went into the records and actually researched the Joels of the world that owned multiple mortgages. And she figured out we were investors. And at month 10 of a new mortgage that went of public record, she would come talk to that person and ask them about refinancing. Because back then, banks wouldn't let you to refinance to free market value until month 12. So she was lining up her customers. And of course, we're investors. We're not homeowners. It's very different, right? We all want to get our money back out. So you can imagine she's lining up this beautiful book of business for herself with, for the most part, people who had good credit, reasonable balance sheets, some income. So she's finding the right people to lend to.
Right.
And we can do it multiple times. And as she opened their eyes, it just got bigger for her. So I thought she was genius, honestly.
Yeah. So as you're doing that, you're starting to buy additional properties and staying kind of in the residential area. Then when did you, just through helping other people? It sounds like because they're asking questions, saying, "Hey, Joel, how are you doing this?" You're starting to hear other people that have that same need, and then eventually say, "Well, rather than just pass them off, to your lender friend, you may be able to help them out."
Absolutely, yes. So we
Yeah,
started to learn about the concepts of creative finance, private
yeah,
money, those types of things, which enabled us, to your point, to go by, we had side by side 6-unit buildings with a shared parking lot. We had two 12-unit buildings similarly. And we found them, honestly, from people who needed to sell them. Nothing more dramatic or in creative. We just kept telling people what we were looking for and what we did, and that we had the ability to close. And we proved it a couple of times, and that really changed everything. People started to actually ask us if we would be interested instead of us having
yeah.
to go chase them down. And it was a game changer.
Oh, that's incredible. And so you built a business on that. There was definitely a need for it. And so tell me a little bit about how has that business changed today? Sounds like it started all in residential. It sounds like you branched out from there.
I got really lucky. That's the truth. I worked for someone who was fantastic in the commercial mortgage market space. She is one of the all-time greats in New Jersey and tri-state area. And a loan came into the office, and it was a gas station loan. So kind of dirty. It wasn't the sexiest loan. It wasn't a 100-unit apartment building. And the guy who wanted to borrow the money was looking to buy his first location. For years, he had leased a few, but he never owned one yet. An Indian gentleman. And he said, like a lot of people, Joel, if you could help me, I can introduce you to 40 friends. Well, if I showed you the contacts list in my phone book of my phone, you would see it wasn't 40, it was hundreds. And my
Yeah,
children have all gone to college from all those referrals. And I've been truly blessed. So around the tri-state area, I became quickly known for specializing in specialty use properties and mostly foreign born Americans. And that became
yeah,
the crux of what I did. And I spent time learning at night about the intricacies of those types of scenarios. And most people don't like them because it's hard and it takes a lot longer to close. But once you get in, you don't realize the depth of the referral. I'm sitting in New Jersey. I've done stuff in California, Utah, Wisconsin, Texas, Florida, all over, from sitting in New Jersey and spending the exact same marketing budget every year. Zero. Just from the couples.
yeah.
So it was very special, sort of an incredible thing. I owe a debt of gratitude to someone who easily could have done the loan, but she just didn't want to. And a gas station loan and a big construction loan changed my professional career path dramatically.
Yeah, I could see that years ago. I kind of just fell into a niche where I took a listing that happened to be a gas station, and I was amazed too. Just it's very similar. There's so many. If you just, because I actually cold called them or just walked into them, and it was amazing how many people get their start in that business at working for somebody else, but they all have a desire at some point to own their own.
Absolutely.
And so it's just being able to show them that path. And obviously financing is a big piece of it.
It's a really interesting thing. People will look down on it or make fun of it, but they don't really understand how intricate that business is. How many vendors you're working with that all come to your location if you have a convenience store. And some of the large national chains, across America, you have Circle K and other big brands like that. In the Northeast and down the East Coast, you have Wawa's and Quick Checks, and you have these monster organizations. So the businesses, though, are attractive to foreign-born Americans because you basically learn how to speak money and you can operate your business. So you can learn
Yeah.
very little English and morph right into it. And that was an easy transition for a lot of the families. People don't really think about it in that sense. I can deal with 80 vendors if I understand how to speak money. And I can see what the client's eating or requesting, right? So it's very different. And also you can make margin, you can make money. Some of these gas station owners, as you know, are making real money around America, and people are shocked, right? They're far outstripping a lot of people wearing a lot of nice suits and going to jobs that can easily be
That's
replaced
right.
quickly, right? So, when COVID happened, these guys were killing it and doing very, very well. And all of a sudden they were an essential business, right? They went from being this ugly industry to an essential business. So
Right.
that sense, plugging in with really simple things, like some of your guys have been in self-storage, I'm sure, and there again, a simple, basic core business that doesn't seem to ever go out of business. It's kind of like the pizzeria of the real estate industry. You need places to store stuff.
Right.
So, how could I find the right zip code, find the right allocation of land, build something at a rational number? Because it's infinitely less expensive to build that than it is a multifamily apartment building. And can I get a return on my money? And can I finance it correctly? Guys like myself, you, others around the world, around the space, can they help me put that piece together? And if so, I have the beginnings of a very long-term lucrative business for my family.
Absolutely. Tell me a little bit about the way a gas station loan would be structured. Obviously, there's some differences, right? And maybe you can describe some of those differences. I know just from my limited experience, obviously you've got inventory that you need to worry about. That's inventory in the store, but that's also inventory in the tanks,
Right.
the gas,
Absolutely.
and making sure. I know we did environmental tests on the tanks to make sure they weren't leaking. I can just remember just some of the processes, right? It's been quite some time, but since I've been in it, but. Tell me a little bit about it and how it's different from a normal loan, and maybe some of the considerations. And then I'm just curious, because there's other things besides just the real estate. If there's a specific type of loan that needs to happen there.
So for us in this space, you're right. We're going to spend a lot of time in the environmental side of the world. And remember, a lot of states around the country were industrial style states. So they've had a lot of work done in the ground. And you have to now, because of new laws around the country on the Department of Environmental Protection or the environmental protection agencies in various states or the country itself, deal with those as the regulations keep changing and evolving over time. A lot of times, I'm here in New Jersey, Pennsylvania, and New York, for an example, you're going to have a lot of the big oil companies. And similar to drug companies, these are some of the most self-regulated industry players that you could find anywhere. The amount of money they are spending to clean up their own environments is incredible. So a lot of banks that don't normally like to lend to a gas station because, it's a gas station. And every once in
Yeah.
a while I'm watching TV and they just blow one up because it looks cool on TV, which doesn't really happen in real life.
Right. Right.
The new technology is such that they have double wall fiberglass tanks in the ground. And some of these are as large as 15,000 gallons. But the interesting part is if you search the internet and you Google it, as I do and the kids do, and et cetera, you can't find one leak anywhere in America. So the
Yeah.
technology has become phenomenal, but you have this transition piece from the last 40 years to now where you're constantly cleaning up old sites. So the big oil companies, the Exxon Mobils, the BP North Americas, the Arco Shells of the world, they are indemnifying and taking that risk for lenders and the owner.
Huh.
So a lot of times you could walk in and let's say a bank is a nice bank and I don't know, they have 3 billion of assets. Well, now ExxonMobil is indemnifying. And how large are they relative to the bank, right?
Yeah.
We need a serious event to happen in America for ExxonMobil to have like a shutdown scenario. But a $3 billion bank with some bad multifamily loans can go quick. So,
Yeah. That's true.
it's an interesting conundrum. So we have certain banks that if big oil was there previously, they're very happy to lend to. Other banks that want to find really good clients that have great balance sheets and great credit are also willing to play. They wouldn't normally, but because they're trying to land that kind of client who has big cash flow that can run through their bank, they're willing. So you have some subtleties there. But yes, to your point, I just closed a loan that I know this will sound insane to your listeners. It only took 9 years. From
Yeah,
start
that
to finish.
sounds.
I look back and I saw the first email was in 2015, and we had to work with, I think in this case it was BP's limited site remediation professionals in New Jersey. That's the title. And
Mhm.
they had been working through the remediation process for 9 years till it finally got to a point where a bank was willing to fund it. It had been that far along. But so you do run into some things like that, which absolutely turns people off, right? You don't want to be involved in anything like that. So you're building this funnel like in any other business we all have. And inside of that funnel, you're going to have some of these, but you're also going to have ones that close every 3 months. And that
Yeah.
combination between car wash, oil change facilities, self-storage, gas stations themselves, auto mechanic shops, things that are kind of dirty, you can build a hell of a business quietly and really
Yeah.
reduce your personal competition because people just don't want to deal with that. So I came to the game later in life. I had an ex-wife already. I was married. I had kids. I had lots of them. I had college tuitions and mortgages, and I had no choice. I had to do something that could go fast. Well, everybody wants to fund a 100-unit apartment building. It's a big paycheck. It's pretty easy to
Yeah.
do, quite frankly. Banks love it, but they don't need Joel. Once you're really established in the business, do you get a call like once a year for something like that? Yes, but you don't get that as a starting point. And I needed something to ignite, my career at that point. And this gave me that opportunity. And over time, it's knock wood. I've been very fortunate, very fortunate. So I'm very thankful to all the people across a lot of different cultures and communities. I learned more in the last 20 years about culture and community and brotherhood than I ever learned in my first 40 years of life. And it's really changed our family's whole trajectory.
Yeah, that's great. That's great. And so in these, what kind of terms? Obviously, it's going to be dependent on the asset. It's going to be dependent on who the borrower is. But a typical, say, gas station term, what type of amortization do you get there? How much just in general are you putting down on something like that? Does it include the inventories, as part of the financing, or is that part of your down payment? Tell me a little bit about how that would work.
So in general, most commercial loans for those that aren't in that space are generally going to be 5-year fixed rates that get reset every 5 years. Sometimes there's a 7-year fixed rate or a 10-year, but most common is a 5-year structure, and it's going to be amortized over 20 or 25 years. That amortization sort of works like your home mortgage, where that payment's based on that. What is interesting is a lot of gas station owners, especially bigger operators, are looking for shorter amortizations. They actually want to pay off the properties faster. And part of
Yeah.
that's cultural. They just don't like debt. So they're borrowing to acquire, maybe for some upgrades at the location, not too frequently for the inventory. A lot of the inventory is coming out of pocket or a swap deal with the seller. And they might pay the seller privately, $40,000 for the convenience store goods. But the fuel that goes in the ground is being paid as the loads are delivered. So that's sort of a separate agreement with your fuel supplier. Rates are not going to be very different than, yes, a multifamily apartment building is probably the cheapest out there, but these are owner-occupied businesses, and owner-occupied businesses are a positive on the balance sheet of a bank. A local community bank, even the larger regional ones, are mandated to lend to their communities to support business in their local communities. So even though they might not love the gas station, they might not love the car wash, the oil change, they are supporting Little League Baseball. They are supporting the local football Pop Warner. And banks want to tap in with that. So owner-occupied is a positive, and it can help offset when a bank has done something they shouldn't have done, like make way too many multifamily loans, which is an issue around America right now. So if
Right.
you are out there and you can bring banks owner-occupied properties right now, including the ugly gas station, you're going to get a lot more traction than you did 2.5, 3 years ago when the market was on fire in multifamily land around America. You're actually helping the bank rebalance their balance sheet right now. So we just did we just did a gas station loan this week. We closed for one of our long-term clients at 5.59, which is a fantastic rate, which was even cheaper than a larger multifamily deal we did recently at 5.85. So,
Yeah.
People are surprised to see that that's out there once in a while, but it's up to guys like us to go be able to mine the markets and find that for customers. But again, these people are incredibly loyal and are an incredible referral basis just from the sizes of their own family. I mean, sometimes they might do business with 5 or 6 members of the same family across multiple states. And truthfully, you couldn't find nicer people to work with. They're a pleasure. They want your help. They appreciate your help. And they just give you more business. So it's a great way to build out a business. It does take startup time, that's true. But you couldn't ask for nicer people, truthfully. It's incredible. It's a very helping experience.
WealthFlow audience, pardon me for a quick interruption to today's show, but I have some exciting news that I want to be sure that all of our listeners are aware of. We just launched 3 totally unique to the market funds that are at the cutting edge of technology and AI. We have combined my 25 years of real estate experience and my recent work as VP of development for a tech company to bring 3 awesome investment options to our audience. For full details, go to our website at bobocapitalventures.com. Again, that is BOBO capitalventures.com. All right, back to the show. What about from a trading standpoint on some of these? Are they sold like on a cap rate basis, or what does that typically look like? And is there an advantage when it comes to that from comparison to say multifamily?
So I think a lot of these specialty use type properties are sold both on cap rate, but also as a multiple of what you can earn. So in gas stations in particular, you're going to see very small margins reported on tax returns, but the people who operate within the industry understand what that relates to in terms of total earnings, and you'll get paid for that. So you might see a gas station trade at 20 times net earnings, which seems insanely high compared to normal ways that businesses trade. But look, there's some adjustments going on out there, right? And I'm not I'm not the tax people doing it, but you can see, right? You don't travel an hour a day, do 10 million a year in sales, and report $14,000 a year in positive income to travel an hour and 15 minutes each way and live in $1 million or $2 million house and have a small mortgage or none, right? There's a reason,
right?
So, people are definitely conscious of that, but some of the big oil flags like the Exxons, the BPs, the Shells. And some of the medium-sized companies, well, not so medium anymore, but the Wawas of the world, the Quick Checks of the world, you're seeing them trade institutionally. And you're seeing cap rates as low as 6%, 6.5%, 7% to be common for those types of trades. That is much more, to your point, a very institutional looking and feeling trade. And inside of some of the bigger banks that you deal with, there are petroleum finance groups. People, average normal people like myself, would never know they exist. But you might go to the Wells Fargos of the world who would never lend to a gas station unless, Keith, of course, you owned $1 billion worth of them. And then they want to lend you 500, 600 million at once. Right?
Yeah.
That's very different. They don't want to lend to the mom and pop guy who owns 1 or 2. That's true. So once you start to see that, you get involved in the industry and you understand where to go. You're doing things that are very different than what you might first initially understand. Again, I've been very fortunate. I get to work with some of the more successful guys, men and women around the industry at this point. And it's funny, some of the oil lawyers will be like, you seem to just keep popping up all the time. I'm like, well, yeah, nobody out here really wants to do this. So they just keep coming back to me, right? Oh, okay.
Yeah.
Like one of the guys from ExxonMobil, I know him like 20 years now. It's funny. We'll keep emailing, and once every 5 years, you see him at an event. He's like, "Oh, that's you? Yeah. I used to have the same haircut, type of thing." But it's kind of fun. You get to know the people, and inside of that world, it's sort of a small world, right? And a few people are accounting for 80% of the transactions, and some of these people are just doing it gigantically. Exxon's largest distributor owns 1,000 plus locations. That's a
Wow.
very significant business. It was the first time in my career I ever saw tax returns with over $1 billion a year in sales.
Oh, wow. Yeah.
Right? So people don't realize how sophisticated some of these businesses are.
For sure. And so what are some of the other niche so gas stations for sure. What are some of the other niches that, you kind of find yourself lending on, and, some of maybe the advantages of that type of an investment?
So we do a lot of private loans, and people will come to us. I spent this weekend on Saturday for a couple hours and met a family out in Hazelden, PA, and they're doing something in the supermarket business, right? They have a very good, successful running business. They've bought some other real estate around it. They're going to give us that as collateral so that they can go buy another supermarket, which is not the simplest thing when you don't own the real estate to get financed, are these businesses. Good cash flowing businesses. You would think banks would be a little more in tune with it for people who are experienced, but it's still not the simplest thing. So a lot of people are out there quietly using their other assets or their anchor asset to raise capital quickly from people like us in the private world to then go deploy. So a lot of people will say, Keith, 12%, 11% interest rates, interest only, that's crazy. I would never pay that. But if you're using the money strategically to go buy a cash flowing business where you believe you're earning 25 to 40% annually,
Right.
helping you facilitate that, and you can get rid of me in under a year back to a mainline bank once you can show your own results, and now they fund you back at 6.5% currently in the market. Now that all makes sense. I'm a business solution. I'm not a bad private lender anymore. I'm a business solution. And we've seen the industry change dramatically the last 10, 15 years that way, as more and more professionals are thinking of it that way. Versus when, we used to drive by in a car, roll the window down, you throw the payment in, and like, we're bad guys, we might take your property one day, right? The business is completely different, infinitely more professional. Big institutions have got in. Money comes from people, Goldman Sachs of the world through their vehicle Genesis, BlackRock, Blackstones, Nomura Securities, Churchill Securities. A number of different insurance companies are out there putting money out. So it's become much more professional. And the types of people using it are very different than what a lot of people would expect. A huge part of our client base has 700 plus credit scores, good balance sheets, good personal histories. They're not what, when I was in the early 2000s and our quote hard money clients look like. It's very different nowadays. We're a business solution now, and that's the way it should be thought of.
Yeah, for sure. And if you're structuring it where it is interest only, even though you've got a higher interest rate, the overall, because you're not paying principal down while you're doing this turnaround or stabilizing the financials. So like you said, you can do a refinance down the road. It's just a calculation within the business. It's not it's something that allows you to basically expand and continue to grow. And it's not a bad thing.
I 100% agree. And it takes a certain level of maturity of it as an investor to begin to really embrace that and figure out strategically where to use it. You're looking at a warehouse nobody wants, but the town wants it back on the tax roll. And there's a housing shortage need in the community. Can I convert that warehouse to 16 apartments? Can I get backing from the city and locals to enable me to make that transition? And if so, does it make sense to put this deal together? Because I know as I begin to get stabilized, every bank will want to lend to it then. But right now it's this vacant, ugly looking warehouse sitting there for 24 months vacant. And that's not a very pretty picture to go into your local community bank with, or the Wells Fargos of the world, not to pick on Wells Fargo today, but it's just not something that they really tune in with. But in the private world, we can provide you that money and be your conduit towards that business solution.
Right. Makes sense. And you're able to do that, through basically looking at their financial statement and saying, okay, it looks like you've got some collateral over here that we can, that we can basically secure this loan with. Because if you're going, and maybe there's some that you're doing on the actual real estate itself, but a non-operating, like the example that you gave with, this gas station or whatever it is, that's just not in business. And they're looking to convert it and bring it back to life. Obviously, you're not going to go with what the financials. I guess you could go with what the financials potentially are, but more inclined, I would think, to take a lean on one of their existing assets so that you can easily feel good about borrowing.
I think one of the biggest mistakes in real estate out there is people actually think it's about real estate.
Yeah.
Very, very rarely is it ever. It's about relationships and people. And to your point, I'm betting on the jockey, right? Do I really believe, based on your experience, that you can execute this? And if so, I'm interested. If not, even if you give me a ton of collateral, I'm not interested. I don't want to own your property. I want to be a solution, a conduit. So it's important for us to understand who the people are. And that's why we go meet them a lot. We'll go to the job sites or go to the project and meet them, not just to look at the project, but it's really to meet them and get a good sense of them. I mean, tax returns, look, I've been divorced twice. There's a lot of different accountants that'll help you do a lot of different things. A lot of people self-file and, mistakes get made, let's just say, and go unaudited. Yeah. So you can't only go by that. But someone's ability to actually execute a plan and put it together coherently and then execute it is crucial. Sometimes people will call you up, and I'm sure as you've had experience in your business, after like 12, 14 minutes, like your head wants to explode. And you're thinking to yourself, like, there's no way I can lend $2 million to that person. It's not going to be. Like, it's just not going to work. It's never going to get better than right now, and right now is not good. So, we're only in the dating stage. I can imagine when I'm stuck, right? I'm married here, and now I'm stuck, and, so that's really important for us in the due diligence phase up front. I can't really emphasize that enough. Inside of the private lending space, that due diligence on the borrowers, the core financials of the borrower, that's really important.
Mm-hmm. Yeah, makes sense. And geographically, Joel, it sounds like you're lending a little bit of everywhere. Are there specific states that you try to stay out of? Or some that you find that here's another loan in this state. It's one that's just you're very active in.
Yes, for us, up and down the East Coast is really good.
Okay,
there are some states where it's exceptionally consumer lending favorable. So, for instance, Vermont, we don't lend in. The consumer lending laws make it unattractive. The usury laws in the Dakotas make it difficult, so we don't lend there. Utah is a brick and mortar state. I really have to set up a physical shop to be there. I have to have people on payroll and be local. So that's a tough state for us. So there are some situations like that. We really stay to our core. I'm in New Jersey. I go to Florida a lot, for the usual reasons. And, we try to keep it local to where we understand. So up and down the East Coast is pretty simple. And then I'd say east of the Mississippi, we're pretty comfortable if the deals make sense. But bread and butter, up and down the East Coast, really simple stuff. We understand the terrain. We have business friends up and down. We've already done deals there. We know attorneys. So it's easy for us to function and be properly protected and be able to get to locations if we needed to. So we kind of stick to that.
Okay. And what about, you do hotels as well?
Yes. Gas stations and hotels sort of go together. The community and Pakistani community are strong. And, so we speak a couple of words of Gujarati, Hindi, and Punjab. Just to get us illo. And it's become a running joke with some of my friends that, they pick the phone up and they'll have to, wait, who is that for a minute? I'll say hello and say something funny and they'll just start laughing. But it's been very good. I mean, obviously I couldn't get into the industry doing those big multifamily deals, but, you see a Fairfield by Marriott with 104 rooms, and that's a $10 million loan or an $8 million, usually at least $6 million. So that sort of replaced those multifamily buildings I couldn't get to. But for me, those hotels were nice sized deals. And again, that family is going to own multiple. To be a Marriott flag owner, you have to own multiple. So they've grown in the industry. And once you become their trusted confidant, they keep going to you. So you might do 2-3 loans with that family, which could be anywhere from $15 to $30 million. And you've helped them grow their net worth. You've helped them figure out how to be efficient with money. And in there, you've met their children and you keep growing that. My kids know their kids now. And those families keep together working side by side for a long, long time. Their kids go on to Harvard, MIT, NYU, Duke, and come back out. Now they buy medical office building, a medium-sized center where they can park their law office, or their professional practice where they're a doctor upstairs and have a different professional practice across the whole floor on the first floor of their building with a 10-year triple net lease from a credit-rated tenant. We had one of our guys, he's an orthodontist by trade. He built out a building and has Atlantic Healthcare Systems that people see driving all over the country as their first floor tenant on like a 20-year triple net lease, and they're upstairs with their orthodontic practice. Fantastic piece of real estate. Awesome part of their portfolio long term. And if you met the guy who put it all together, you'd be like, how did that even happen? But they're the entrepreneurs of America now. And you have to be plugged in with that or you get bypassed. You see what's happening in the Latino Hispanic communities, the Indian Pakistani communities, the Black African American communities, women on the whole. If you're really not touching bases inside of these communities right now, you're being left behind.
Yeah, for sure. Is there anything when it comes to lending, say on a hotel, that's different or that needs to be considered? And what makes that, I guess, a unique product?
I can give you a quick funny story. Very early in my career, I had a hotel deal and I didn't really understand it that well. That's the truth. And in the hotel industry, there's something called the STAR report, which basically is going to look at your daily occupancy, your daily room rates, and the average revenue you're generating per room over the course of a month, quarterly, and annually. And those will match up and you'll be rated against them. And a bank can start to look at that as a yardstick, right, for your operation. So I'm dealing with a bank, good sized bank, and I get a call from the analyst. Says, Joel, I think we have a problem. The way I'm calculating it, your occupancy is over 100%. How can that be? I was so excited that the math looked so good on paper that I sent it in without really slowing down for a minute and breaking it down and thinking about what was going on there before I sent it into the bank. And even though the numbers were spectacular, the bank had to decline the loan because they didn't want to be affiliated with a facility that was renting, every 4 hours, if you understand what I mean.
I gotcha.
But I was so naive. I was so excited. This is going to be great. I'm going to make my commission. The guy's going to be thrilled. He's getting a great interest rate. And I blew it because I didn't really think about what was happening. And we were operating at over 100% when the general market was like 78. But I was excited that the performance was so good that it was so good. I didn't think about what it was performing. So, once in a while you have to, learn your nuance of your niches and make sure you're understanding what's happening there and being able to ask the right questions before you even get to the finance stage. That's really important, being able to break those things down now.
Yeah. Because that's a big piece of the job too, right? It's just not only looking at the asset, looking at, who the borrower is, but also figuring out how am I going to present this? How am I going to bring it to, the various, in lender and packaging it up the correct way so that it's going to get approved.
It's amazing how much I've learned about businesses and industries over the last 20, 30 years. It's incredible, honestly. I was in private business as a trader and we did a lot of private investing back then. So I had some exposure to tax returns and statements. So I started to understand those and that translated really well into what I was doing in the commercial space. I was able to take the information presented to me and be able to ask questions that an underwriter will eventually ask. Yes, they go more in depth and they would ask more questions than I did. But I could get the ball rolling, to your point, and begin to get the package together such it would make sense for a bank to be interested and be able to provide a good, solid financing package to a borrower, which is really what we're all after. We're trying to find the best in breed solutions for people. And I like to focus on owner-occupied businesses. It's something you can feel really good about. You know how important those businesses and locations are to the families, what kind of significant impact that's making to them. And to me, I have a lot of kids and I understand that for myself personally. So I found that was very rewarding, and that's sort of been my niche. It has focused mostly on foreign born Americans, and that just enhanced it and took it to such a different level. It's unbelievable. You can go to a closing and you have this experience. A lot of times people were buying something for the first time in America. They would hug you, give you a kiss. They're crying. It's an emotional experience for them, and it's changing their family's dynamic. And, in your own way, you had a little piece of something to do with that. And, it's a very powerful, moving feeling. It's great. And it just incents you to just keep doing it, right? It's that kind of intrinsic reward. It's fantastic. And coming out of Wall Street, where you never had any of that, it was, such a change for me. And I was looking for something that would have meaning, right? And this gave that to me. And so I've always been, very thankful to the people. It's been amazing, honestly.
Yeah, no, that's a great point. That's I'm sure just a really nice piece of that of the job, being able to help people like that.
Yeah.
Joel, this has been great. How can people find out more about you if they want to reach out to you, potentially talk to you about an opportunity that they have?
So the easiest way to find us is just to go right to the website. The website is B with 4 R's. So depending on where you are in the country today, think about you're freezing cold. But it's B with 4Rs.com. Very simple. And we don't use bots on the website. We use people. So we really will respond to you, and I will be one of them. So you can get us there. That's simple. We're around at different trade shows around the country, but getting to the website is probably the quickest, fastest, easiest way.
Perfect. And I got a couple other questions for you that I ask every guest. One would just be, what advice you would give somebody who's maybe just starting out in their investment journey?
The younger you can start, the better off you are. Even if it's as simple as taking $100 a month and putting it into some type of total stock market fund with a low cost, like Vanguard's a good one, for instance.
Mm-hmm. Mm-hmm.
They'll take small investments. So if you're 18 years old out there listening, or you're 21 or 22 just coming out of college or beginning to exit college, and you're thinking about your future and just starting to create both a budget and an automatic investment plan, that's going to change your life dramatically. And the earlier you can start, the better. Keeping it super simple. If you don't understand it, don't do it. If someone can't explain it to you on a one-pager that you really can make heads or tails of, don't do it, right? Keep it simple. The richest people in the world are not giving somebody $10,000 and getting back $100,000 3 weeks later. That's mythical, right? So keep it simple, stupid. That what's it called? KISS, keep it simple, stupid, right?
Right, yeah.
That's really holds true. I stick to my lane. I understand real estate and how to value it. I don't know other than very cursory cryptocurrency. I'm not a wine trader. I don't do oil and gas. I understand real estate, so I stick to my lane. If something comes up that sounds attractive as another area, I go to seek out a friend that I trust that's an expert in that area for advice on it, or else I just never do it. That's the truth.
Yeah.
Again, unfortunately, with today's social media, the concepts of multiple streams of income are bandied about so quickly and so easily. But the truth is, the people who are most successful with it have a core competency. And when they have multiple streams, it's off those cores. It's not 8 different things in 8 different directions, right? Because then you're basically doing 8 things averagely and never really getting to what you want, which is to be, super successful. And that comes from core competency.
Yeah, I agree. I mean, I hear a lot being an inch wide and a mile deep, on a specific avenue. But when you start scattering all over the place, it can be difficult to master that many different things. So I think that's great advice. How about a book recommendation, Joel? Doesn't have to be real estate or finance related, but it certainly can be something you've read that's been impactful.
There's a great book. It's super simple. And it doesn't matter what business you're in. It doesn't matter what age you are. And actually, for older people, it might even be more impactful. It's The Who, Not the How by Dan Sullivan. Really simple book that began to reinforce a lot of things that people had said to me over the years. The biggest mistake I made in my career and what I was taught in the schools in America was if you want to make more money, the how is to just go work more hours, get a second job. We've all kind of heard that. But the truth is, to really accelerate and be successful, it's who can you partner with and build teams with so that the sum of those parts are greater than the individual, right? And the reality is, I've been working for 30 years, 40 years. They still only have 24/7 on the calendar and the clock, right? So if I can't figure out a way how to strategically expand that, I can't really change much. But the who, not the how, the 10 or 12 simple principles constantly gone over in that book of how to build teams and processes and procedures so you can scale, it's a game changer. And the earlier you tap in with that, the more successful you'll be. Your relationships will be better. Your health will be better. Clarity in your own head will be fantastic. And, from there, a lot of great things happen. So I would highly recommend that book. And it's a very simple read.
Yeah, it is a great one for sure. Well, Joel, this has been fantastic. I appreciate you taking the time to come on the Wealth Flow today, and I think we'll call it a show. Thank you so much.
Keith, thanks a lot for having us on. We appreciate it. And, if we can ever help in any way, please just let us know. Thank you. We appreciate the opportunity to be on with you today. Thank you.
All right. If you're still here, I assume that you found value in today's show and with the guests we interviewed. Please take a minute to subscribe and to review the show. It really helps. Also, wanted to remind you to check out Bobo Capital Ventures to get the first look at our 3 new cutting-edge, first-to-the-market investment opportunities. We have only about 15 spots for each fund for retail investors, and we would love, more than anything else, to have our audience be part of that group of limited partner investors. Thanks for listening to The Wealth Flow, and have a great day.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.